Hi guys, you're welcome to my channel, and in today's video I will be talking about the fake breakout, how you can take the fake breakout trade, how you can catch this fake breakout trade before they happen, and then how you can understand why you're taking this fake breakout trade, because this is sources of market pressure for the continuation of trends. And if you are not going to understand what market pressure is, if you don't understand what market pressure is, that it is market pressure that brings about every trend, then the fake breakout will be hitting you every time you experience them. So in this video I'm going to start from here so that I can tell you what the fake breakout is. So now in this one we have a trending market. In a trending market, how is that fake breakout going to happen? It is similar for every market though, but it's important that you know the kind of market you are in so that you can understand how you can trade this fake breakout. Obviously, you all know how you can identify an uptrend and a downtrend. For those of you who are my mentorship students, I'm sure you don't need me to say these things again. You already know how you can do this. Now, for instance, this is a trend line. This is a one deviation Bollinger Band upper because it's an uptrend. This might be a middle Bollinger Band. So we'll have an uptrend, and then these retracements start happening. Now, when these retracements start happening, we all know as traders we can't see this part of the market, so this part of the market is going to be closed. We all know that. What we'll be asking ourselves is this: should I continue with this downtrend? What if I continue with this downtrend and then the buyers come in? Or what if I go with the buyers and then this downtrend continues? And this is one of the major problems everybody has with trading. But with experience and with exposure, I promise you by the end of this video you are going to understand why you are failing these trades and how you can take it. So let's go on. Now, if this is the trend line, if this is the key level, whatever key level, it might be an EMA, it can be whatever, but all we know is this: we are in an uptrend, we are in a strong uptrend. Now, after this candlestick, we are expecting to see a red candlestick here. Sorry, a red candlestick that is big. That means a huge red candlestick that will continue the downtrend. But what we saw is a red weak candlestick. Now, it is one thing for a candlestick to be weak. It is normal. A candlestick can be weak. Maybe there is no momentum. But it is another thing for a candlestick to be weak at a key level. I need you to understand what I said. A candlestick can be weak and it's normal. We can say, oh, that's loss of a momentum. What if this candlestick is weak at a key level? Now, let's add one more step to it. What if this candlestick is weak at a key level and then this same candlestick this key level is in an uptrend? So you see a red candlestick is weak at a buyer's level. You see, it's just self-fulfilling that the buyers are going to eat up the sellers at that level. So in other words, when you see something like this, you know that this is a fake breakout. So you go with the buyers. And as the case may be, after this win, if the candle comes here again, you go again with the buyers. Don't worry, at the end of this explanation, I'm going to go to my screen and I'll show you some of the trades that I took based on this fake breakout so that you get the full understanding. Now, this is for an uptrend. What about a downtrend? It's similar, just the opposite is the case here. Now, in a downtrend, of course, we have a major downtrend and we have a pullback, and here is the pullback. Now, at this market, what we see is simple. We see like maybe a round number, maybe here, an EMA, a Bollinger Band, but we know it's a major downtrend. Why? Because we can see a trend line coming down. We can see Bollinger Band facing down. We can see the EMA aligned in the downward direction. So after this candle break this key level, so we start thinking again, is this a real breakout or is this a fake breakout? What we want to know is, where is the major trend? Where is the trend going? Because we want to trade always in the direction of the major trend. And then we are going to see this shooting star. Immediately we see this shooting star breaking this same level that was broken, then we know this is what a fake breakout. What do? We go into a put trade because this is going to get us in the money. So you also just wait for price to come back to that key level area. At a little rejection, you see, you do a put trade. So this is how we trade the fake breakout for both an uptrend and both a downtrend. Now, what about when we are in a ranging market? Most probably when we are at the end of the trend. Now, as you can see, this might be the one deviation Bollinger Band upper. This might be the two deviation Bollinger Band upper. At a ranging market, these two will act as resistance level for an uptrend. But then the first EMA, sorry, the first Bollinger Band, which is the one deviation, got broken by this candle. Now you might be thinking, oh, how come the one deviation is being broken by the uptrend? Maybe a breakout of this trading range is about to happen, and then yet again you see another strong candle. Then surely you might be thinking, oh, this is really a breakout. Now, when the price comes back here, you can decide to do a call trade, and fortunately for you, you get that in the morning. But you're getting this in the morning, but this candlestick now is not even breaking. It's supposed to have a strong momentum here. Now, what is this candle signifying here? It's signifying a reversal, because at this point you are at the resistance and the end of an uptrend. You are at a place where at this left side there are buyers. For instance, let's say this wasn't here. For instance, let's say this wasn't here, this line wasn't here. This is the whole place. Now you can see that there are sellers here. So therefore this candle now becomes what? I want someone to pause right now and tell me the name of this candlestick at the comment section. I'm not going to say it, I have said it before. This candlestick now bears a new name only because of the position it is being located at this point. Comment what this candle is at the comment section. Now, after you get this kind of candle that is showing a reversal pattern, not a continuation at this time, you now get the reversal, and this is what we've been waiting for. This is exactly what we've been waiting for. Now, when you get the reversal, all you have to do is to wait for price to come to this key level and most probably above it, and then you do a put trade. But if price does not come to this key level, you can wait for something like a green candle to close at this key level, and then you do a put trade. And the same thing is this is a ranging market. Like you see markets going up, down, and then we see a breakout. But at this case, the breakout is happening with weak candlestick. A candlestick that has the same length, upper and lower shadow, is a weak candlestick. Now, if only this was the case, it would have been better. But now we are seeing the next red candlestick is rejecting, but not even rejecting from this key level. So you can see that there is something happening. The rejection from this candle is a rejection not from a key level, and such rejection are weak rejection. They have no pressure behind them. Therefore, this is a fake breakout of this trading range, and then you should go with the put. And when this candlestick closes, you can also wait for the price to come back here, just like I said here, and then you can do another put trade here. It will be clearer to you when I show you the how do I put it. It will be clearer when I show you the trade in the live market. Now, this one is very interesting. This pattern is very interesting because I have already told you about the exhaustion candle. This candle here is exactly what it is, the exhaustion candle. So we are in a downtrend and the trend is losing momentum. Obviously, there are buying pressure below here. Now, after this downtrend, you see a breakout from the key level. You can go with your call trade here. But if you want to be conservative, if you want to be less risks, if you want to take less risks, all you have to do is to wait to see a weak green candle like this. When you see a weak green candle like this, you can go with your call trade here, or you can see a green candle that is something like this, that is breaking like this, breaking the key level again, and then you can go with your call trade here. This will be very good. And last but not the least is something like what we have here, but this is not an exhaustion candle. We are in an uptrend, a weak uptrend, and we are seeing this kind of candle up and the same weak upper and lower weak at a resistance level. This is a weak buying pressure candle. Now we see an evening star. This is a reversal pattern. So we are expecting, when we see a reversal pattern, where are our key levels? We are seeing something here. This is a key level, like I showed you before, and this is also a key level. Even this week might be a key level, not very strong key level, but price can reverse from either here, or here. So when the next candle comes, we are expecting price to come to make any reaction with either of these levels. But to your surprise, you see price breaking through. So when price breaks through, you become skeptical, because at this point you're saying, is this a reversal or is this a continuation of the previous trend? So you need to know. But one thing that is clear, you might not know any other thing, but what you know is this is a ranging market, and in a ranging market, you do a call trade from the support and you do a put trade from the resistance. In other words, you sell from the resistance and you buy from the support. And if this is a ranging market, this is a breakout. So you need to see more sign of this breakout. Now, if you had gone with this trade here, the reason why it's good to understand market condition, if you had gone with a call trade, you would have won the trade, right? Of course. But after you win the trade, at this point you will get locked up in the idea that a new trend has started, and then you do a trade here again, and then you will lose the trade. When you begin to lose and you win trade like this, it will quickly take you out of that flow of market analysis, of market information. You begin to misunderstand the information that the market is giving to you, because when you have an evening star here, automatically this place here, let me make this here already has selling pressure. A strong selling pressure with support or resistance is stronger than any kind of candle. It is stronger than any kind of candlestick. Why? Because this support and resistance is being formed by 1, 2, 3, most probably 4, 5 candle at the left. But this green candle here is just one candle, and the strongest part of this green candle is not at this closing price, it's at the opening price. You see, this is information that people will take money for. The strongest part of this candlestick is not at this closing price, it's at the opening price. If I want to trade this candlestick, I will have to wait for price to come down to this strongest part, and then I'll take a trade. Now, the strongest part here of this candlestick is at the opening price, not at the closing price. So when this candle goes back here and you are seeing a candle that is weak like this, then you should know that the selling pressure that was here, that failed to show up in this candle, has now showed up in this candle. And why? Because it wants people, the market wants you to believe that this is an uptrend, so that when you buy, it sells to you, and it sells so much to you. So you go with a put trade here, and then, like I have always said, if this candle is closing like this, you can now see that there is a level here that you can use. When the price comes back here, you can trade here. When this price comes back to this place, you can do a put trade here too. So this is how you trade your fake breakout. This is how you spot them. Trading the fake breakout is not the problem. Spotting them before they happen is the problem. So I urge you to practice this. For my mentorship students, I've given you special strategy. I've given you special strategies, and the fake breakout is part of that strategy. When I tell you to wait for the closing of the price outside the zone, this is what I'm telling you. These are the setups that you can easily look at for. These are the kind of setup you can easily look at for outside the zone, not inside, not at the top, outside the zone, and then you execute this trade. You execute them as much as they come. The only thing you need to know is to get an idea of where your key level are and what is the major trend. If you don't know the major trend, you don't have to force yourself. If you don't know if this market is trending, if this market is ranging, don't force yourself. There are millions and millions of opportunities that will come into the market. So, enough said, let me go back to our chart, and then I'll show you some of the examples of these fake breakout trades. So in this first trade, you can see now that we were in a downtrend, but right now the market is going to reverse. But as in a downtrend, the market does not just reverse like that. It will at least form a consolidation or a ranging market. Now I'm taking advantage of this ranging market. So as you can see, I'm waiting to do a put trade. Why? There was a breakout of this consolidation. Now I just did a put trade. There is a breakout of that consolidation market whereby a shooting star was formed. But you see, the shooting star did not trigger at the first time price went back there. No, it did not trigger. So price went up to the EMA and the Bollinger Band, and you see sellers was being triggered from that point. And when I saw that, you see I'm marking it now. When I saw that, I went with the put trade, because that is how the fake breakout normally happens. Now, before you know, the market is going to range a bit and it will continue its uptrend. This is how it happens. So if you want to get a fake breakout, you look at the current market condition. Right now we are in a consolidation, because we are seeing prices at the end already, and for you to go up you need more consolidation. So the next trade, obviously anyone can understand that we are in an uptrend, because we can see the 200 EMA, 100 EMA, the 50 EMA, and the 20 EMA. They are all aligned above each other and price is above them. Now at this point we can see now that the market is doing a pullback to the 1 deviation upper Bollinger Band, which is supposed to be a breakout. But then we have to wait. We have to wait to see, because at this point we should be asking ourselves, is this a downward breakout or is this a pullback? The next candle is going to confirm if this is a downward breakout or a pullback. So the next candle after the breakout, if it's a downward trend, is supposed to continue the trend, but now we can see that the next candle is not continuing it, so we go with the upward direction for this trade. This is exactly what we do. So when the trade ends right now, call. So now when you get the call option, you have to wait. Another way you can trade this is after this call option, you have to see that the candle close above the EMA, above the Bollinger Band, in this case above the 1 deviation Bollinger Band, and then you can also use that 1 deviation Bollinger Band to do another call trade if you want to take less risks. This method I just show you involves taking more risks, but if you want the risks to be less, then you can wait for the fake breaker to actually happen, and then you continue in the direction of the fake breakout. This is as simple as that. Like I said, all you need to know is the major direction of the trend, and if you don't know the major direction of the trend, there is no problem about that. All you have to do is to switch your pair. There is a reason why we have multiple pairs in our chart. Switch your pair and you will get the pair whereby the major direction is being shown. If this is your first time, please do it to like, share, and subscribe before I show you the last example. Now we'll go to the last example. Now I'm just talking about this trade whereby you can do the next trade that follows up, in as much as the second candle broke that 1 deviation. Even as little as it is, you can do your call trade. Now for our last trade, for this one I missed the opportunity. Otherwise, after the shooting star, there was a fake breakout from the previous left. You can see that there was a consolidation, there was a fake breaker, so I had to wait for the evening star pattern to form. I got a retracement candlestick, and then I did the put trade, because this is what a fake breakout is. The fake breakout of the 2 deviation Bollinger Band upper and of the consolidation area by the left side of our chart. When this thing happen, we see the evening star, you can go for your trade. This is a 1 minute trade, but at this point you can go for a 3 minutes, 4 minutes trade, and you will get your trades in the morning. So this is what we have for fake breakouts. If this is your first time, please do it to like, share, and subscribe. If you want to get the ebook, you can contact me with the link in the description of this video, and I'll tell you how you can get the ebook. So you can subscribe to our channel, and then you get more important educational content like this as often as possible. So until next time, take care and bye bye.